All right, here we are again. This is the last class period before you take your test, okay? And before the period is over today, we'll talk a little bit about exactly what's going to be on that test. But this will be the final lecture in that little section, okay? So the first thing that I want to do is go through the homework that I assigned today, okay? So let's go ahead and do that. The first one, and I'm going to jump around a little bit, but the first one I want to go through is Quick Study 10.1. Quick Study 10.1, okay? We'll read through this, but did anybody get an answer on Quick Study 10.1? What was your number?
389,200.
Close, but not exactly. Yeah, the answer to number one is $385,000. Did anybody get that? Let's talk through that. Quick Study 10.1. Marlin Bowling installs automatic scorekeeping equipment with an invoice cost of $350,000. The electrical work required for the... Okay, let's back up. They install automatic scorekeeping equipment with an invoice cost of $350,000. Do we include that? Yes, of course. The electrical work required for the installation costs $10,000. Do we include that? Yes, we do. Additional costs are $4,000 for delivery. Do we include that? Yes. And $21,000 for sales tax. Do we include that? Yes. During the installation, a component of the equipment is carelessly left on a lane and hit by the automatic lane cleaning machine. The cost of repairing the component is $4,200. What is the total recorded cost of the automatic scorekeeping equipment? Do we include the $4,200 repair charge? No, the answer is no. And as this states, zoom in a little bit, we do not include the $4,200 because it is not considered a normal and reasonable expenditure necessary to get the asset in place and ready for its intended use. We would just charge that $4,200 off to repair expense, okay? So you have to ask yourself what things are reasonably expected to be in there, to be needed to get that asset ready for use. Does that make sense? So the answer there is $385,000. Make sense? Any questions on Quick Study 10.1? If not, I want to jump over to Exercise 10.4. Exercise 10.4 is on the straight line method. Okay? Exercise 10.4. In early January 2009, Sanchez Builders purchases equipment for $102,000 to use in operating activities for the next 5 years. It estimates that the equipment salvage value is $21,000. Prepare a table showing depreciation and book value for each of the 5 years, assuming straight line depreciation. Okay? All right, we can do that. First of all, though, I want to define a term, and I think I've defined it before, but I want to define it again because it's a term we use a lot, but people always seem to go, what is that again? Okay? That is book value. Okay? The book value of an asset equals the cost of the asset minus the accumulated depreciation, okay? The book value of an asset equals the cost minus the accumulated depreciation. You'll use that a lot in accounting and in future classes as well. But students always seem to be fuzzy in regards to how we actually calculate that, okay? The book value of an asset, sometimes it's called the net book value of an asset, is the cost of the asset minus the total of what we have depreciated, the accumulated depreciation. Okay? So, let's take a look at Exercise 10.4 answer. First of all, we want to figure out the straight line depreciation amount, correct? And how much was that? 16.2 is correct. We get that by taking the cost of the asset minus the salvage or residual value divided by the estimated life of the asset, which equals 16,200 per year. Now, it says we purchased this in early 09. After the test, when we continue on with this chapter, we'll talk about what happens when, if and when, you purchase something that's not in January, you know, if it's not a full year. But for the test, everything will be purchased at the beginning of January. Okay, it'll be a full year. All right, now let's do the table for exercise 10.4. Once again, the year-end book value is the cost of $102,000 minus the accumulated depreciation. So at this point, this is the annual depreciation. This isn't actually accumulated depreciation. But this is $102,000 minus 16.2. And then we subtract another 16.2 off there, and we get 69.6. Another 16.2, we get 53.4. Okay? Now notice that we only depreciate this down to $21,000 year-end book value. That's the salvage value. Okay? That is the salvage value. Does that make sense? Questions on that?
If it didn't start on January, that would just be prorated, wouldn't it?
Yeah, we just prorate. It's pretty easy. But you don't have to worry about that for now. Okay, that was exercise 10.4. Now I want to skip back over to Quick Study 10.6. Did we do that one in class? I don't think we had time to do that in class, did we?
No, we did not.
Okay. Double declining balance is usually the one that students have the most trouble on. So let's do that here in class. Okay? Quick Study 10.6. A fleet of refrigerated delivery trucks is acquired on January 5 of 09 at a cost of $1.2 million with an estimated useful life of 8 years and an estimated salvage value of $100,000. Compute the depreciation expense for the first 3 years using the double declining balance method. Okay? All right, we can do that, can't we? Okay, let's do this. First step we do is we take the number 100% and we divide it by the estimated useful life, which is what? 8 years. And that equals 12.5%, right? Then we take that times 2, since it is the double declining balance method, and thus gives us 25% as our double declining balance rate. You with me? It's double declining balance. So that's why we take it times the 2. Always be the 2. Okay? Okay, now, year 1. We always take the double declining balance rate times the beginning of the period book value. Remember, book value is cost minus accumulated depreciation, right? So in year 1, we haven't depreciated anything, have we?
No.
So that is 1.2 million minus, how much have we depreciated? 0. What's 25% times 1.2 million? $300,000. Okay? Year 2, we take 25% times the beginning of the year book value, which is 1.2 million minus, what have we depreciated? 300,000. And that equals what? See, it's less amount. In double declining balance rate, we depreciate more in the early years. Okay? Year 3, we take 25% times the beginning of the year book value, which is what? 1.2 million minus the 300,000, which we depreciated year 1, minus the 225,000 that we depreciated year 2, correct? And that equals what? Let me do that in my head. Oh, I think it's about 168,750. Okay? All right, does that make sense? And of course, the entry to do depreciation, it doesn't ask for this, but is always a debit to depreciation expense and a credit to accumulated depreciation. Okay? This reminds me, on the test, always make sure you make special notice. Is it asking me to do a journal entry or just calculate an amount? Now here it just asked you to calculate an amount, right? But if I ask you on the test to make the journal entry, make sure you not only calculate the amount, but put it in the correct journal entry. Okay? That goes on the Chapter 9 allowance methods too. Okay, does this make a little bit more sense now that we've done one together? Okay, what I want to do is just take a little break, maybe 90 seconds, 2 minutes or so, and I want to look over exercise 10.5, which I believe is another example of a double declining balance method. Okay? Because some of you had emailed me and said you were having a little trouble with this. So now that we've done one together, let's go ahead and just take about 90 seconds here. We'll roll the music. Maybe you're done with it, but maybe you need to look over it. If you didn't get it done, let's work on it now. So I'll see you in about 90 seconds, okay? Exercise 10.5. All right, let's take a look at our answer. If you guys at home aren't done yet, just pause it. Start it up when you are done. Okay, looking at the screen, we take 100% divided by the estimated life of 5 years. That gives us 20%, which we multiply times 2, and that gives us our double declining balance rate of 40%, correct? Okay, so year 1, let's see what we got going here. I need to back it up a little bit, don't I? Okay. All right, year one, we have beginning of the year book value of 102%. We take that times the depreciation rate of 40%. That gives us annual depreciation in 09, that first year, of $40,800. The year-end book value is the beginning of the year book value minus the annual depreciation, correct? How many people got that amount? Raise your hand. Okay, good. The next year, the beginning of the year book value, of course, just moves down to here. We take it times 40%. That gives us an annual depreciation of $24,480. So now we could take the beginning of the year book value minus the annual depreciation, and that gives us this. Or you could take the total cost of $102,000 minus everything that's been depreciated. Okay? Now that follows on with the third year. Okay? And of course, we're depreciating less each year. All right? Did you get those answers, guys? Okay, the only thing on this one is we have a situation. Before we go on, let's actually jump back over to our slides, because I think we ran out of time last time, and I don't think we got fully able to discuss this one. Okay, so as soon as I get the right slide up here, we'll jump over to the PowerPoints again. Okay? But in double declining balance method, you take more depreciation in the early years as opposed to the later years. The only caveat here is, take a look up at the screen now. What we have done here, if you look back at your example in your PowerPoints, is we figured out under the double declining balance method the amount of depreciation expense to take each year. Okay, and that's how you come up with the amounts that are in that depreciation expense column. Here's the only deal though. You cannot depreciate your book value below salvage value. And in this sort of situation, that book value, calculating depreciation for 2012, gives us a book value that is less than salvage value. We can't do that. So what we have to do is we have to do what we call forcing the last year. And what we do is we can only depreciate as much that year as possible without the book value declining below the salvage value for that asset. Does this make sense? So that last year we say we have to force the depreciation expense. So the book value equals the salvage value. Make sense? Okay, now let's hop back over to this example. And we didn't really talk about this before you did it, so I wouldn't be surprised if you didn't get it right. But looking at this answer, we cannot depreciate in 2012. We only can depreciate 1,032 because that brings that year-end book value down to the salvage value of $21,000 for this asset. So once we've reached that point, we're done. We don't even depreciate anything in 2013. And we only depreciate 1,032 in 2012. Okay? All right. Now, we didn't really talk about that last period, so you might have not done that correctly. But that's okay. All right. Any questions on that one? Any questions? All right. Let's do this. I would like to get a little bit more practice on this. So I would like to do exercise 10.6, exercise 10.7, an exercise 10-8 in class. I'd like to work on those. That'll take us a few minutes. But let's do exercise 10-6, 10-7, and 10-8 in class. We'll meet up in a little bit and we'll go over the answers together. You folks at home, join with us. And we will see in a little bit when we go over the answers. Exercise 10-6, 10-7, 10-8. Hi, everybody. Okay, let's go back to this. All right, the first one was pretty easy, was it not? Straight line method. Hopefully you're not struggling with that one. And the answer for each year, and they did purchase this in early January, busy shopping time, was 6,300. Probably no questions on that though, right? Okay, let's take a look at the units of production. Once again, we have the same numerator. We still take 67,000 minus the salvage value of 4,000, but this time we divide it by the total amount of production that we think we'll get out of that asset, which in this case is 420,000 units. That gives us a depreciation per unit rate of 15 cents. We then take that times the amount of production we did in that specific period, which in this case, in the second year, was 29,900 units, times 0.15, and the amount of depreciation that we would thus take is 4,485. Remember the entry for depreciation. They don't ever ask for it, but I want you to be able to do it. Debit to depreciation expense, credit to accumulated depreciation. By the way, what type of account is accumulated depreciation? Contra asset. You are correct. The credit balance. Okay, now let's look at 10.8, which is the double declining balance method. Okay, first we have to figure out what is our double declining balance rate. Okay? Double declining balance rate, we take 100% divided by 10 years. That equals 10%. Take it times 2, and our double declining balance rate is thus 20%. Now, even though they only ask for the first year, we really have to do, or they only ask for the second year, we have to do the first year too, don't we? The first year, we take the beginning of the year book value, which is the cost of 67,000 minus 0 accumulated depreciation. We haven't depreciated anything yet. We take that times the 20%. That gives us 13,400. The next year, we take the book value at the beginning of the year is 67,000 cost minus what we've depreciated, 13,400, 53,600, and we take that times the double declining balance rate of 20%, and we get a depreciation amount of 10,720. Cool? Is it getting better? What's the best way to study for my tests?
Homework.
Get a blank piece of paper out and see if you can do the homework. If you can't do the homework, you can't do the test, can you? Okay? Now, you should have a practice test as well. Okay? But since that's a good segue over to the test. And of course, for you folks at home, I always email you in regards to the specific dates and information. You should have that for your tests. Okay? However, I have a little study guide that I'm going to put up on the screen, and for you folks here, I'm going to pass this out so that you know, so it gives you a little idea what to study for the test. Generally speaking, the test is over 8, 9, and the first part of 10 that we have gone over thus far. Okay? Now, this is not an exhaustive list. What that means is that this list is the stuff I guarantee you that the stuff on this list will be on the test. Now, that doesn't mean if it's not on this list, I can't put it on there. Okay? Well, you don't have to. You don't have to. But this is stuff that I guarantee you will be on the test. I just don't want a student to go, hey, you asked about this and you didn't have it on your little list. Okay, well, if we get down to that, I'll just stop giving these little lists. But usually, this is going to be the majority of what is on there. Okay? These are things that I promise you will have to do. Chapters 8, Principles of Internal Control. And I'm not the type of teacher that's going to say, write out the 8 or 9 Principles of Internal Control. I don't do that. But what I might do is have a multiple choice question where I ask you, something like, which one of these is not a principle, or which one of these is or something like that. You need to do those petty cash journal entries. You need to be able to do a bank reconciliation. Let me tell you something about the bank reconciliation, okay? Come off this for a second. I don't know what it is about the bank reconciliation, but remember how the bank reconciliation, it has to balance? I have had students absolutely obsess over their bank rec because they can't get it to balance, okay? The bank rec is probably going to be worth 5 or 6 points total, okay? Do not spend 30 minutes of your test time trying to get this thing to balance. I have had students sit in my class stuck on that bank rec for 25 or 30 minutes. I can't get it to balance. And meanwhile, they have to, the time is up, they hand in a test, and it's not even complete. There's 2 or 3 problems they didn't even touch because they got obsessively compulsive, what's the word, OCD. They got OCD with the bank rec, okay? It's worth 5 or 6 points, and that's it. And if you don't get it to balance, if you do it neatly and clearly, you're probably going to get some partial credit anyway. But it doesn't make any sense to spend 30 minutes on a problem that's worth 5 or 6 points. Does this make sense? I always say this for you folks at home too. We need to learn good test-taking skills. I've gone through this before, but I'm going to go through it again. I always think the best thing to do with a test is to go through the whole test, take 20 seconds, 30 seconds, just know what you got here, right? And then your brain can kind of subconsciously even start thinking about that stuff, okay? The brain's amazing, is an amazing thing, okay? But then as you work through it, if you go to one where you're like, uh-oh, I'm not very good in this area, or uh-oh, this always takes me a long time, put a question mark there, skip it, and go on. Go through the test and do the things that you know how to do first. Then come back. Like I said, I've had students who have the third multiple choice question is something that they really, really, really have trouble with, and they'll spend 20 minutes on that stupid multiple choice question. And then, guess what? They end up getting it wrong anyway. And then all these other multiple choice questions, which they know, they had to rush through them, or maybe they didn't even get them done. Okay? So you got to be smart with your time. You never want to get to the point where there's 3 minutes, 4 minutes, 5 minutes left in your test, and you're worried that the teacher's going to pick up the test and you're not going to have it done. Okay? If you don't have it done, the ones that you don't have done better at least be the subjects or the topics that you have the most trouble with. Okay? Now, I'm nicer than a lot of college professors. When you go to your 4-year university, a lot of my students are transfer students. How many people are going to go to their 4-year? There's instructors there, K-State, KU, Emporia State, Baker, that when the time is up, they'll just grab it. And if you haven't put your answers over on the Scantron, so sad for you. Okay? I always tell my students who think I'm mean, I said, send me an email your senior year of college. You'll realize what a sweet, wonderful person I am. Okay? And you'll miss me. All right? But never, ever get to the end of a test and be in a situation where you have multiple pages of stuff you haven't done. Okay? If you're spending more than 3 or 4 minutes on a problem, that's a red flag. Okay? All right? Okay, going back to this. That's my sermon of today. Chapter 9. Make sure you can, under the allowance method, make sure you can estimate bad debt expense. You know, that was the percentage of sales, the percentage of receivable method. Make sure you can write off an account. Those are 2 separate things, 2 separate journal entries. Make sure you know how accounts receivable and allowance for doubtful account is presented on the balance sheet. What type of account is allowance for doubtful account? Ooh, it was kind of quiet there. Allowance for doubtful account is a what type of account? It's not a contra asset, it's a contra asset, right? No question mark at the end. Allowance for doubtful accounts, like accumulated depreciation, is a contra asset. And what type of balance does it have? Credit. So know how that's shown on the balance sheet with AR. You need to be able to do some notes receivable. I think we did a few of those transactions. And remember credit card receivables? You want to be able to do that. This reminds me of another thing. I'm full of great test advice today, but that's okay. We have some extra time. Coming off of the screen to me, whenever you have an accounting question that says, like it gives you a scenario and then it says, it's a multiple choice question and it says, the journal entry to do this transaction would include, and then there's like 5 options, a debit to sales for this amount, a credit to sales for this amount, a debit to AR. You know, have you seen those types of questions? You know the best way to do those? Act like it's not a multiple choice question. Cover up the answers, do the journal entry, and then looking at your journal entry, look for the option that corresponds with the journal entry you just made. Does this make sense? Because I've had students before who get lazy and they go, I don't need to make the journal entry, I'll just look for, and then they choose the wrong one. Okay? So when I ask you to do those, and I think there is a couple of those on this next test, just do the journal entry. Or do whatever it asks for and then look for the multiple choice option that corresponds with your work. Okay, going back to the screen. And then the first part of chapter 10. Basically, this is pages 390 to 399 in the textbook. However, we have not yet gone over lump sum asset purchases, so you do not need to know that for this test. But I want you to know the basic fundamentals of plant assets. I want you to be able to compute the cost of plant assets like we did in Quick Study 10.1. And I want you to be able to compute depreciation under the 3 methods, straight line, units of production, and double declining balance. Cool? All right, is there any other questions? All right, for you folks at home, don't wait till the last day, the last hour to take your test, because something will come up, you'll have car trouble or whatever, and you won't get in there. So leave yourself some margin. I always give you about at least 4 or 5 days where you can take that test. So don't wait till the last minute, okay? For you folks here, we'll see you live next class period. When we come back after the test and everybody has taken it, we'll continue on. We'll finish chapter 10, and then we'll do chapter 11, okay? See you later.